welcome to India Market Close. Very similar trading day as to what we've seen over the last 2 days. The texture of trade is the same. Intraday charts look exactly the same. Markets open at a high, consolidate for most part of the day, and finally towards the last hour of trade start selling out. Well, today is no different. The Sensex and the Nifty both in negative territory. Nifty, of course, will be respecting or trying to defend the 21,500 mark. 21,522 is what we have. The Sensex also trading muted ahead of the earnings season that kicks off with Infosys and TCS tomorrow. Well, that's Bank Nifty. This was, of course, the one to be blamed for the weakness that we'd seen on the street over the last 2 days. This afternoon, though, Bank Nifty trading flat to slightly positive. We still wouldn't get ahead of ourselves and say that it's actually providing support to the benchmark. But for now, Bank Nifty not looking as bad in the index, trading marginally higher in today's trade. Well, broader markets moving in line with the benchmark. Mid-cap is down marginally. Small-cap index trades flat as well. So you've got not really too much to hold on to in terms of trade this afternoon. Well, the breadth of the market was a 50-50 picture when I last checked. I don't think much has changed. You've got a whole bunch of stocks that are moving down and up, but the breadth clearly in favor of the bears. The declines are about 1,087 for advances at 885. So you've got not really a half and half picture there. Well, those are your big movers and shakers. Cipla is doing all right. You've got 2.5% gains on back of stock-specific news. Adani Enterprise also up 2.5%. In fact, all the Adani stocks are looking good. You've got Adani Enterprise, Adani Ports, both higher. HCL Tech, surprisingly, ahead of the IT earning kick-off season, trades with a marginal gain. IndusInd Bank, Tata Motors, RIL are some of your gainers in trade. On the sell side, though, the picture is pretty bleak. You've got ONGC down 3%. Remember, you had a PL downgrade that came in on the stock yesterday, but the reaction is a day too late. Nevertheless, the counter trades the cut of 3%. Nestle, Apollo Hospitals, OMCs as well aren't doing too well. So BPCL, HPCL also losing in trade. Auto counters are looking weak. Banks are not doing too well. There are some banks that are doing okay, but the large cap names like Kotak are actually trading in with some pressure. FMCG continues to be bleak. Remember, those business updates that we've seen have indicated that rural still is a weak spot for FMCG players, on back of which most of your FMCG counters are trading with a downward bias. So all in all, very similar intraday chart to what we've seen over Monday and Tuesday. The markets have been making new lows and new high, in fact, staying on the same highs, but the range really remains from 21,700 to 21,750 on the upside. On the downside, of course, 21,500 is acting as a critical level of support this afternoon, Hersh.
Well, yes, absolutely, Samina. And, I'm going to take us through some of the stocks which are buzzing in trade today. We had the likes of a KIOCL, which was buzzing on the back of their plant or their manufacturing facility not manufacturing or being shut down due to certain constraints with regard to raw materials, 3.3% lower on that one. Let's also quickly switch focus to some other counters. One of them in focus was also the likes of a Cochin shipyard. That stock was up a solid 17%, in fact now up 17% in trade. There was a stock split in that one. Effective date was today. Puravankara, solid set of numbers with regard to its Q3 business update coming through. Sales value up 56%, customer collections up 52%, and that one also making a bit of noise. I will also flag off the likes of an RVNL. RVNL had quite a bulk deal there, a 0.1% bulk deal, and you can see the stock up roughly 5% on the back of that. We also had Delivery, which is one of the top gainers on the Nifty mid-cap. The stock is up roughly 5%. Again, BofA has suggested a buy on Delivery, target price 472. So those were some of the big ones, some of the stocks really making noise and news in trade today.
Harsh, yes, it's interesting. I just said that the markets were looking weak and the day's low point, but you know what has happened in the last couple of minutes? We've actually recovered from the day's low point. Now at 21,540 odd is what the index trades at. It's going to be a little bit of a struggle. The bulls and bears will fight for a positive close, but it'll be interesting to see how we finally close out in today's day of trade. Harsh highlighted a few stocks that were in action in this afternoon, but stocks like Trident as well are seeing some profit taking after a very very sharp run-up over the last few days. Trident is seeing a cut of nearly 6%. Sona BLW, that had been the flavor all through December, is seeing a cut of 3.5% as well. Jyoti Labs is under pressure. Smaller banks like City Union are seeing a little bit of pressure, selling pressure emerging as well. BSE is also down in today's trade. VMart, KEI Industries are your other top losers. On the gaining side, TV18 has had a pretty large bulk deal. The stock is up 20% upper circuit right there. Avanti Feeds is not looking too bad. Yes Bank, interestingly, seeing a 4% rally. Be interesting to know what's happening there. Lemon Tree continues to rally up, and some of your railway stocks or railway ancillaries are also having a pretty decent day in trade. Well, you've got Manappuram Finance, that's down 5%. I'd love to know why that stock is moving the way it is. We'll try and understand what's happening in that one too. But Jay Bala, founder and chief market technician of Cashthechaos, joins in, and we've also got Vijay Chopra, MD&CEO Enoch Ventures joining in. Jay, afternoon. Thanks for joining in. First up, today's intraday chart looked very similar to what we've seen on Monday and Tuesday, where we've opened positive and pretty much given up or turned fatigue towards market closing. 21,500 though has been respected at least in the last 2 days. At these levels, which is around 21,500, tactically, would you consider going long?
Hi, Samina. You used the right word, fatigue. That's the word the market is, carrying forward. It's the markets are fatigued and they have come to important resistance. And if you look at the banking index, that's looked like it's topping out. But none of the main indices have broken below critical supports. So, until that happens, you can tentatively continue to be, buying the dips. But be very conscious that the market is very close to topping out. And if critical supports were given, this buy the dip strategy would change to sell the rise strategy. So, we are pretty close to it. So from a very short-term perspective, as long as the Nifty stays above 21,300, we can still try to employ a buy the dip strategy.
Jay, what are you doing with Bank Nifty? I mean, participation on Bank Nifty is actually critical for the index to move higher. 47,300 is where we are at right now. There is, again, struggle. So you've got mixed trends that are emerging in banking. And today, out of the last 3 days, is one of the few days that Bank Nifty is actually outperforming the benchmark to a certain extent. Would you go long Bank Nifty, or too early to tell and you'd still avoid it for now?
Absolutely. I completely avoid the longs and banking index. If you draw a trend line from the 2018 highs and connect it to the 2015 high, all the highs subsequently of 2020, the COVID highs, the 2021 highs, the 2022 highs, and 2023 highs, all are hitting that trend line. So, the markets are sending a very critical message when it comes to the banking sector. It's very tired and it risks a major top around these levels. So the critical level for the banking index is 46,920. If the banking sector were to drop below that, I would definitely pull a few shots over there. But at the moment, it's just a wait and watch. We are on a high alert that we don't preempt the market. So, and we wait for the markets to confirm the supports are breaking. Once that happens, we are raring to go on the short side at the moment. So avoid longs. And HDFC Bank, if that's the critical part, if HDFC Bank were to drop below 16.15, that will be a bigger contributor for the market's drop. So watch these levels like a hawk.
Very interesting, Jay. Let me switch over to Vijay. Vijay, Hersh also joining in. Talk to us about how you're looking at valuations more from a fundamental standpoint. At these levels, how are you looking at markets and overall valuations?
Good afternoon. Thanks for having me on the show. I think that the markets are trading at about 22, 23x PE forward earnings. And that's, I would say, a bit on the expensive side. I won't say all the stocks are expensive. But yes, we have seen a lot of run-up in the most of the stocks, especially mid caps and small caps. Some of the large caps have also run up quite a bit. So I think that markets would cool off sooner or later. We would surely see some kind of a correction. I won't say that it's a crash, but it's a correction which is I'm expecting. And it's always better to get out of the overbought stocks and get into stocks which are still having a lot of promise and fundamentally strong, and they're not high on valuation. So during the show, the course of the show, I will share some of my investment ideas where we are still investing and we are recommending to invest.
Right. Also, Vijay, in terms of the way the Nifty Bank is shaping up, you're looking at some of there's a consensus buy on the banking counters, especially on the large private bank space. So how should how do you look at valuations on the Nifty Bank as a whole? And within that pack, what are you finding as the most lucrative buys at this point?
Well, I think, as I said, I think that some of the valuations are stretched. We've seen an HDFC Bank going up, ICICI, Kotak also moving up from the bottom. So I think that there might be some kind of a correction in store. This party cannot last for long. You just cannot see stocks breaking their all-time highs of 52-week highs every single day. There has to be some kind of a rationale. So I think that, we are probably at the end of the interest rate hike cycle. Once the RBI, starts thinking on the lines of bringing down or softening the interest rates, the banks would definitely give a thumbs up. Because, the chances of bad loans would go lower. The asset quality definitely has improved over the last 2-3 years. And I think that it will keep on improving once the interest rates start ebbing down. Now, secondly, the inflation, food inflation, especially during winters, is much lesser than that in summers. So I'm expecting once the inflation softens, the interest rate cycle, starts coming down, then probably I think that banks would show a great thumbs up. So I think that the likes of UCO Bank, the likes of Union Bank, Canara Bank, even SBI are great buys in a correction. I won't say just you go and jump and buy right now, but I think there are good quality banks which are available in the PSU space as well in the private space. I think that Kotak should do well over a period of time, but wait for some kind of a correction. Don't just join the bandwagon, join the euphoria, and get carried away. So at times, money in the pocket or the bank or in certain good stocks is better than just punting. So I would say that just wait. I think that there would be some kind of a correction. And then, you buy good stocks in a correction. We are in a long-term bull run for sure.
Buy on dips market, but what's interesting, it's a buy on dips day as well. The Nifty has recovered. Bank Nifty is 0.3% higher. The broader markets are also looking good. The Sensex has now moved into positive territory, and the Nifty as well is actually looking pretty well placed. So it wouldn't surprise me if we actually go home with some gains by the time we shut shop. In the green on the Nifty 50, that was a pretty sharp and smart recovery in the last couple of minutes of trade. Well, Jay, Reliance Industries, it's carrying its weight for a change this afternoon, 1.5% higher, and a chunk of those gains have come in the last 20 minutes. RIL for a short-term trade?
Yeah, short-term. That's the underlying word, Samina. As long as the stock can hold about 25-20, I think it's trending up. But, although it's pulling up the whole market today, from a slightly higher time frame, the stock has lost momentum in its ascent. So that's not a good sign. But, it can be overcome by higher prices. So, we want RIL to cross 2700 and 2750. That will probably push the momentum higher and can, take the markets higher. But be a bit cautious. 25-20 critical support, as long as the stock can stay about bullish on it. Right,
1.5% higher on RIL, looking good at the moment. But quickly moving on, we'll of course come back to our guests, but several stocks buzzing in trade today in terms of volumes. Anushi is here with some of the volume buzzers. Anushi, take it away.
Right, so right at the top of the list, we have TV18 Broadcast hitting an intraday high of about 19% with its volume buzzing at about 9 times its 30-day average. So this was because of the large trade that happened wherein 20 crore shares changed hands in 22 large trades. Next, we have Avanti Feeds, which hit an intraday high of about 8% with its volumes at about 7.2 times. Over here, there's no such fundamental aspects driving the stock, but just to give an update, the company did did declare it foray into the pet segment. And if you look at the analyst recommendation on this, they suggest a return downside potential of about 5.5%. Next on our list is again a media company over here, Network 18 Media, which hit an upward circuit today at about 20% and with its volumes at about 7 times. Again, a large trade over here with about 5.6 crore shares changing hands and about value amounting to 64 crores. Next on the list is NCC Limited. NCC Limited, while again there is no fundamental triggers over here, the company has a strong order book with its FY24 order book pegged at about 26,000 crore, of which they have already achieved about 80,000 in the H1 of FY24. And lastly on the list is GTD India, which has hit about an intraday high of about 3.3% and its volumes at about 5.5 times its 30-day average. So these are the stocks buzzing in volumes today.
Indeed, lots of stocks that are moving in today's trade, and you've got action across the board, but a lot of those mid-cap names is what is drawing our attention. Vijay, earnings, 2 big ones. IT season kicks off with TCS and Infi. Very quickly, would you recommend any tactical calls here to buy IT stocks ahead of numbers? Because the trade really has been mixed here too. Vijay, we cannot hear you. I think you have to unmute yourself.
Extremely sorry. I was advocating to buy IT stocks almost 6-8 months back when they were touching the bottom. But, I am kind of skeptical on the kind of growth these companies would, the guidance they would give for growth. So I think that, TCS has moved up quite a bit. So has Infosys, even Wipro. It was lying low. So I think that let's wait for the results. And then see how they give the guidance for the next few quarters. So I would be interested to listen to the guidance first and not just go and jump and buy. As I said earlier, I won't recommend doing a blind buying right now. Be very cautious with stocks. There are certain pockets of excellence. You should try and pick out stocks which can probably give you a return on your capital. So there are some I will discuss if you allow.
Please do, Vijay. We'd love to know the stocks that you have on your radar and the ones that you're avoiding. Please go ahead.
Yeah, so I would recommend a buy on RITES. So this is Government of India railway stock, presently trading at about 523.24. I think that this stock has a potential of going up to 550 and then 600. It has a fantastic order book, and we've seen that the kind of run-up railway stocks have shown and the kind of investments which are happening in railways and the expansion which is happening in railways. So RITES is a good buy according to me. Another stock which has corrected quite a bit is Navin Fluorine. All the fluorine companies, SRF has fallen down. I think that Navin Fluorine has got down quite a bit, and it's a quality company. We saw some kind of a senior level exit. That's why the stock started correcting. But I think that the correction is kind of done with. We might see that it might fall further, but just a bit. But I think that the stock has a potential of going up to 4,000. So Navin Fluorine seemingly is a good medium to long term buy. The third call I would give is Vadilal. I always prefer, this is a seasonal play. And I generally buy this stock during peak winters, and I think that it's a quality company, fantastic product, and wonderful distribution across the country. So Vadilal, which trades at 25.85 right now, could be bought for a target of 2,800 and 3,000.
Right, so RITES, Vadilal and Navin Fluorine are the 3 buy calls coming in from Vijay. In the meantime, the market's looking pretty good actually. We're 21,571, well off the day's low point. In fact, trading 10 points away from the day's high. We'll slip into a break. We'll leave you with a wrap of what transpired on day 1 of the vibrant Gujarat Summit.
100 वर्ष मनाएगा, तब तक हमने भारत को विकसित बनाने का लक्ष्य रखा है।
Welcome back. You're watching India Market Close. It's actually not looking too bad for D Street. As we go into the last 30 minutes of trade, the Nifty is almost at the day's high point, trading with a gain of 40%. Actually, it is at the day's high point. 21,585 is what we trade at. I think the bulls will attempt 21,600 for close, but let's wait and see how things plan out in the next couple of minutes. Bank Nifty is providing the leadership, 0.2% higher on Bank Nifty. 47,355 is what we have. Nifty PSC is up about 1%. You've got bunches of stock that are gaining. The breadth of the market as well has actually improved quite a bit in the last few minutes. Stocks like Reliance Industries are up and about in trade right now. One stock that is also at its day's high point is Cochin Shipyard, 25% higher on, there you go, that's RIL, 2.5% gains on Reliance Industries. Cochin Shipyard is up 25%. Network 18 is up 20%. NCC, that's the other one that's definitely worth a mention. The stock opened with a gap up, but trades at almost at its day's high point with a gain of about 9%. It is a large trade. In fact, the company has achieved 80% of its FY24 guidance in the first half of financial year 24. Anushi is standing by with more on that. Anushi, NCC was defying the market sentiment even in early trade. Holding on to those gains of 9%, it's looking good for NCC.
Right, absolutely. So, as you mentioned, that it hit about a 9% upside today, and even as the volumes are strong on this counter with 6 times its volumes compared to its 30-day average. Now, also the order guidance, the company has completed about 80% of its order guidance of rupees 26,000 crore in H1 FY24 itself. So, apart from that, it also recorded about 4,000 odd crore of order wins in the Q3 of FY24. So it's very likely to exceed its order guidance going forward. Apart from that, if you just look at the Q2 FY24, a mixed performance over here with the revenue being up about 39% and margins were lower at about 6% compared to 9%. Other than that, there's a lot of institutional interest in this one, with the likes of ICICI Prudential, Bandhan Sterling Value Fund, and also a key marquee investor, Rekha Rakesh Jhunjhunwala, holding about a 13.1% stake in the company. So that's all on NCC.
In a minute, there's important views that we're getting in. Finance Minister Nirmala Sitharaman is addressing the Vibrant Gujarat Global Summit. Let's hear her out.
It was a partnership with the states. Partnership so that states also aspire and their aspirations find in the scheme of things of the center, and also working together with the states for the strengths that they have, and to make sure that through programs like the aspirational districts, which are later now gone down a bit further to the level of the blocks, gone down in the sense of to the granular levels, to the blocks, looking at development as being a partnership where you leverage the strength of the state and look at strengthening those challenges, in the sense get over the challenges and make them strengths for the states. Therefore, I call it a partnership between the center and states. So this participatory approach is what gives us the language for thinking about how India can be reaching that target through the Amrit Kal, the 25 years between now and 47, that we can reach to build a developed India, not just in terms of what will be reached, 30 trillion US dollars by 2047, but also with the 30 trillion inclusive, empowering growth for all citizens. So Viksit Bharat agenda is a comprehensive vision plan which is being developed by Government of India. I appreciate the effort of the state in getting this already on board. India today is at a turning point, as what the previous speaker has been saying. 21st century will be our century is one thing. But even by 2027-2028, it is believed that we surely will be able to reach the third largest economy goal, about which Honorable Prime Minister has been speaking with a good sense of confidence, and that is because people of India have met with the challenges post-COVID and built the recovery on a strong footing. And therefore, it is possible that we will be the third largest by 27-28, but also that our GDP will cross $5 trillion by that time. By 2047, as I said earlier, it is a conservative estimate that we will reach at least 30 trillion in terms of our economy. But one emphasis that I would like to place is Viksit Bharat is one of the Panch Pran about which Prime Minister had spoken about. And Panch Pran actually marks the soul of Viksit Bharat. Panch Pran is the one with which we had targeted 2047 as the developed country goal. But together with it, the emphasis to remove the colonial mindset which has been in us and which is important for us to get over has been very clearly emphasized on. Enormous work has to be done. People, the states, stakeholders, central government, all of us will have to work to achieve that. I'd like to highlight only about 6 or 7 specific milestones, which I call milestones, but they are the foundational pillars on which Amritkal is going to put all the efforts together to take India into that Viksit Bharat by 2047. Antyodaya is for that inclusive growth, in which, of course, you know about the free food scheme. I'm not expanding on it. But empowering aspect of it is the Swanidhi, which can be taken as a very important example. 57 lakh loans have been granted to street vendors so that the smallest of small person can build his entrepreneurship based on those sovereign guaranteed, in a way, collateral-free loan which they get. And very many schemes of the Prime Minister, one particular on which the UNICEF has come up with a statement saying this open defecation-free ODF families have actually saved 50,000 British pounds. This is UNICEF saying it. So they say 50,000 British pounds have been saved, or in other words, they've averted to that extent spending on healthcare. So in a way, it is a saving for poorer families. So this scheme of Swachh Bharat and the ODF has actually saved poor people from spending on their health-related matters. The next major, which I would highlight, is the direct benefit transfer, where 37,000 crores of rupees was transferred even during COVID, the lockdown period. 16 plus odd crores of people were covered by it. And therefore, even during a lockdown, if that could help us, the DBT, since after that you are seeing 33 lakh crores has been transferred under the DBT, resulting in savings of almost 2.73 lakh crores for the government. Because pilferages were cut down, you were able to use technology to make sure benefits reach those who deserve it, and government was not spending to unknown entities. The third, which I'll highlight, is a financial inclusion program, which India has never seen before like that. Yes, financial inclusion has been a long-drawn goal on which every year a certain number of incremental number of people would come in. But now I'd like to highlight the fact that almost 50 plus crore people have already been brought into formal banking system. Where were we in 2014-15? Only 15 crore people were with bank accounts. Now that has gone up to 50 crore. Equally, connecting to the rural India and farmers, Particularly, I'll take the example of agro-processing, where the value addition element comes for agrarian products. Only 2 mega food processing plants existed in this country in 2014. That's gone up to 24 in 2023, within a matter of 9 years. That brings in value addition to the products. The farmers get better price. The value addition brings jobs, and some of them get exported also, the products. The other highlight which I'd like to bring in as a pillar for Amritkal, on which Amritkal is going to build towards a Vikasit Bharat, is about the emphasis given on sunrise industries. India will now become at least in-house producer of semiconductor capacities. EV adoption is happening in a big way. And therefore, these are things which have emanated from the FDI policy of the country. What is about the FDI policy? Just look at the numbers. India had attracted between 2000, April 2000 and March 2023, 23 years, we had attracted $919 billion in FDI. But it is important for us to recognize that 65% of this $919 billion, that is about $595.25 billion, had all reached India in the last 8 to 9 years. So in the 23 years, you're receiving $919 billion, of which $595 plus billion have come only in the last 9 years, beginning 2014. So your FDI is coming in. It's like water. It flows to the lower ebb. Where policies bring in greater certainty, convenience, ease of doing business, FDI flows in. Of course, disruptions of higher US Fed rate and other things can divert it elsewhere. But despite that, we've been receiving that kind of a flow of the FDI. It's not as if it's coming only for manufacturing, it's coming also for service sector. Service, particularly exports, have also seen a surge from $151 billion that it was US dollars to $325 billion US dollars. So these are all strong foundations which have been laid in the last 9 years. There are one or two more I'll add to it. The third largest startup ecosystem, the PLI scheme, which now cover 14 critical sectors. The UPI, about which, of course, BVR Subramaniam had very clearly mentioned, 100 billion transactions in just the calendar year 2023, over 180 lakh crores being the total value which is being transacted. There's global recognition. G20 was very clearly awed of India's experience in this area. So with all this, technology and digitization have brought people together. 50 crore people have been brought into the banking system. Now look at where the unbanked have come into the banking area. 44% it was where we were in 2014. Only 44% had accounts. Now more than 80% people in this country have bank accounts. Look at Gujarat, therefore, in this context. And Gujarat, which has released its Vikasit Bharat vision document. It is a state which has 5% of our population, just 5%, contributes 8.5% to our GDP. 19% gross value added every year happens from Gujarat to the GVA of the total country. Total gross value addition to the country, 19% comes from Gujarat. The per capita income is 1.7 times the national average. So it is a state which actually is rapidly moving forward, and the state is growing at 12% CAGR between 2011 and 2021 in the 10 years, while the national average is 10.4%. So rightly, we are here in Gujarat talking about its vision for 2047, and certainly 2047, which is going to be developed country for India, and in that, the engine of growth, I see Gujarat being very clear in its vision. I welcome the document, and I'm sure the people of Gujarat, under the leadership of the Chief Minister, will be able to move in that direction. Thank you very much.
Thank you so much, ma'am, for your insightful
Right, that was the finance minister talking about plans for India, saying that India will cross $85 trillion by $5 trillion by 2027-28. Very, very strong commentary coming in. We'll take a break. The markets also the day's high point. RIL is moving the markets this afternoon. Big gains on the Nifty, on the Reliance Industries, and the Nifty also trading higher. We'll take a break. We'll come back. A lot more on the other side. We'll take you to the top buy today's sell calls for tomorrow.
Welcome back. You're watching India Market Close here on NDTV Profit. We have both our guests, Jay as well as Vijay, continuing to be with us. Jay, let me go to you. Sharp recovery in markets, largely led by Reliance. How are you viewing markets ahead of course, weekly expiry tomorrow?
Yeah, I'm bullish on three sectors. One is the pharma sector, another one is the real estate sector, another one is the IT sector, and all of them are short-term plays. Pharma and real estate could last a bit longer, but Nifty IT index could be a much shorter, short-term play, just probably for one higher high above the December highs. You can be bullish on most of the IT names and keep a stop below the January 3rd low registered for most of these IT stocks and expect them to cross the highs registered in December. The best out of them is probably HCL Tech, and I'm bullish for a price objective close to 1600 as long as the stock can stay above 1415. if you want to adopt a BTHT strategy, the stop will be much closer and the target will be much shorter. So the stop for opening a reverse trade of tomorrow for today's strategy would be keep a stop at about 1457 and then expect 1520 tomorrow.
Right, thanks so much for that, Jay. But what's something that I'm looking forward to try and break down here is going to be done by Agam. Agam standing by to break down the FNO cues for today. It's been an extremely interesting day, Agam, and especially an extremely interesting last half hour.
Oh, believe it or not, Hersh, we actually were expecting fireworks, but it's turned out to be a very, very quiet expiry, the banking options expiry. And while we have seen advances of 0.25% as far as the Nifty futures, the underlying is concerned, the Nifty futures are seeing no change in open interest, and largely where we left off the open interest number where it was day before. Even in terms of the bank Nifty, if you consider the 0.25% up move, we're looking at once again less than 1% increase in open interest. It does seem like at the moment traders have not really majorly built on their positions as far as either of these indices are concerned in the index futures. How are the options markets panning out? Where is there more traction? Where we did see a lot more writing around 21,700, 21,800 calls. That was an expected lines. That's because we are looking at the Nifty largely remain around that level. And consequently, the 21,700 call is the one with the maximum open interest in today's day of trade. So, and of course, on the lower end, while the 21,500 does have maximum open interest in terms of puts, a lot of traders are of the opinion that they potentially work with a 300 point, 400 point range between 21,400 on the lower end and 21,800 on the higher end. That said, let's take a look at the Bank Nifty. Now, today was the weekly options expiry, and we've seen largely flattish moves over the past few hours. We really haven't seen too much traction. And while the Bank Nifty tried to move higher, well, it was always met with a little bit of resistance on the higher end, and it has come off. As far as stocks are concerned, well, we are looking at a little bit more positivity. So we did see fresh longs in Z Entertainment, JK Cement, Vedanta, and Polycab. Polycab is a curious one because now we've seen a little bit of a flip over there. And of course, in terms of all stocks which are advancing, short covering for Delta Corp, Nalco, Hindustan Copper, LTIM, and Birla. Delta Corp is a curious one because the earnings were not encouraging at all, but it is trending higher by around 2.2%. But speaking of earnings, it's going to be about IT earnings tomorrow and a lot more excitement, upcoming there.
Agam, very quickly, I don't know if you prepped for this, but Reliance Industries, 2.8% gains. I think it single-handedly turned the Nifty positive. Yeah. Anything on the FNO data there yet?
Why don't we pull up the Reliance Industries snapshot and take a look at whether or not we have, in fact, seen a lot of activity. Because, yes, it's certainly a heavyweight. It's most certainly going to, give that impetus as far as the major index is concerned. If we do have the Reliance Industries future snapshot, well, we should have it on your screen in just a moment. There you have it. So we do in fact see about a 3% increase in open interest, what looks like potentially fresh longs. About the mark of 2650, 2600 itself is a little bit of a conquering of sorts as far as Reliance Industries is concerned. So certainly a positive. The question really is that do we see about a profit taking in Reliance Industries tomorrow? It seems like, this is a positional trade, but it's a wait and watch on that one.
No, it's looking good. And RIL has single-handedly lifted the Nifty into positive territory, looking pretty well placed on the index as well. 21,620 is what we have on the benchmark. Jay, we've got another 10-12 minutes to go before we start wrapping up trade. Any trades, buy today, sell tomorrow, sell today, buy tomorrow calls from you?
Yeah, as I said, I'm bullish on the pharma sector. So Supla is a good one there. And so Supla is a buy today, sell tomorrow opportunity there. So stop under 1310 and price objective close to 1360 is what I'm looking for in Supla.
quick mention on the dollar rupee pair as well. The rupee is looking to close sub 83. So 82.97 is what we have on the dollar rupee pair. It is the highest level on the dollar rupee pair since December 18. Now this is also turning out to be, okay, it's back up at 83. So it did make an intraday high of 82.97. Vijay, we were discussing RIL and it's looking like there has some enormous amount of buying that's come in the last 30 to 40 odd minutes. Would you buy Reliance Industries? You've got earnings around the corner. Crude is the joker in the pack. But I mean, RIL is so much more than oil and gas now. How would you play Reliance Industries? Do you hold it? If not, do you recommend it?
Samina, yes, definitely we hold it, and the long-term investors we would not recommend to sell. Very rightly mentioned by you, RIL now is much more than oil and gas. They have some of the top 100 brands in the world with them. They've got retail. They've got lots and lots of businesses and new businesses also which are coming up. So I would say that long-term investors definitely hold on to Reliance. There would be several demergers and several companies coming out of Reliance still. We have already seen Geofin coming out. But yes, in the shorter term, I won't recommend that you go and jump and buy. Wait for a correction. And if at all you get Reliance close to about 2480, 2460, that would be a great level to get into Reliance. But right now, at 2650, I am a bit skeptic. Don't buy right now.
Oh. Understood. So that's the view coming in on Reliance. Buy on dips continues to be the strategy and the theme that Vijay seems to be propagating. But let me quickly move it to another counter which has been in focus today. We have Manappuram Finance, which is in focus because Asirvad Microfinance, it holds a majority stake in that company. IPO has been put on abeyance by SEBI. Now, when I'm looking at Asirvad's broad numbers, Samina, we're looking at book value of roughly 1,800 odd crores in terms of net worth. Typically, these microfinance companies are trading at around 2.5 times price to book. So if I can extrapolate the numbers, roughly the valuation of this company within the Manappuram setup is roughly 2,000 to 3,000 crore. When I'm looking at Manappuram's valuation of around 14,000 crore, it's a substantial meaty number because it's roughly 20% of Manappuram's valuation. And therefore, you can see the knock on the stock largely due to the delay on the IPO. And that's what's really impacting that one today. Let me go across to Vijay. Vijay, any view with regard to Manappuram, point number one, and with regard to Asirvad Microfinance, if you've had a chance to read the DRHP?
I'm extremely sorry, I have not gone through the DRHP, but sure. Manappuram, for sure, I can comment. I think that, as I said, stocks are correcting. There might be reasons, reasons coming out of nowhere, but we do have a reason. I've not gone through the DRHP though. But yes, Manappuram, it's a good company. Gold is at a all-time high. The business model is very clear. They give about 60 to 70% of the gold value. The gold value has gone up considerably. So I think that they are sitting on a very good, loan book, which is healthy as well due to the high prices of gold. So I would say that, wait for a correction. The ideal point of Manappuram would be anywhere, between 145 and 150. So wait for that level to come, and then definitely you can buy. But I have not gone through the DRHP. I'm extremely sorry for that.
Right, that's Manappuram Finance. The stock is under pressure. 5% cut is what we are seeing on that. On the charts, Jay, do you track this one?
Yeah, I do. And I also have a medium-term outlook on Manappuram. So basically, we classify markets the way they move. If you looked at the weekly charts of Manappuram, it moved from the 2022 highs to the 2022 low in a 5-step fashion. And right now, the recent high was about 185, and it's that slightly overshot the 61.8 Fibonacci retracement of the last year's move. I mean, last year, 2022 move. So, and it's getting rejected just from that. So this is not a positive sign, and I would sometime expect the stock to break below the 2022 low. And it's not a short-term call; it's slightly, slightly medium-term play. So, if you have stocks that picked up around the lows, you might want to lock in profits to a large extent and not hold beyond 25% of what you picked up.
Jay, have you been looking at Vedanta? There was a downgrade that came from Moody's early this morning. The stock saw a gap down opening, which got bought into, and it trades at its day's high points. There's almost a 3.5% recovery from its day's low on Vedanta. Have you tracked this one, Jay, on the charts?
Yeah, see, Vedanta, is got a copper exposure too, and I'm slightly bullish on copper for the short term. But looking at the charts, the Nifty metals have had a good run. They are all coming to an exhaustion point. And when I say good run, it's been a phenomenal run for the Nifty metals index. And given that Vedanta has considerable exposure to copper, and I expect copper to break fresh lows in 2024. So I wouldn't put too much into this. I would expect this rally to peak out sometime in January and not beyond that. So it's just an extreme short-term bet. And I expect once copper breaks below 3.72, the high-grade copper traded on COMEX, once that happens, I expect copper to drop 25%. So little bearish on metals names, all the base metals, in fact.
Wow, that's a bit of bearishness with regard to that call. 25% drop in copper when renewables are, in vogue. But let me quickly switch it over to Vijay. Vijay, what do you make of this Moody's note from a fundamental standpoint? This is a company which generates, roughly 25,000 crore of cash when I'm adding PAT plus depreciation annually. And it's a 1 lakh crore market cap. There's going to be some amount of value unlocking happening as a result of the demerger. What's your sense with regard to how Vedanta should be looked at? Because stock was languishing in trade, now up 2.5%.
Well, there could be several reasons for the stock to go up. But again, fundamentally speaking, I'm very wary and afraid of those companies which are high on debt. And Vedanta, is one company which, and most of the Anil Agarwal companies, so to say, they have pledged their entire holding. Now, this is scary. They were not able to raise capital in the country. They were trying to raise capital offshore. And, the kind of debt levels this company has is really worrisome. Secondly, the high dividend which the company pays, most of the dividend goes to the promoters. Now, promoters are definitely getting richer. It's a large company. I'm definitely sticking my neck out. But again, the company is getting poorer. So what's the logic? I would say that, better bring down the debt levels. If at all the company is planning to sell some of its stake, it's better to be in shape, fiscal shape. And then probably, you can look at. I completely understand and second that, Vedanta is a behemoth in itself. The kind of, the prowess it has found in metallurgy and, in mining metals. I think it has done a stupendous job in the last 3-4 decades. But yes, debt levels are very, very, very worrisome. I would say that, if the stock is coming up, people are holding this stock, they should try and come out. That would be the strategy in Vedanta. I would say in the metal pack, I like, the likes of NMDC Steel. Huge value inside. It's a Government of India company and recent demerger from NMDC. So NMDC Steel, which trades at about 48, 49, it's a huge value stock. I think that it can double up from here if people keep it for a longer term. So better to exit out of debt-laden companies, which can create potential problems. And definitely we are seeing some kind of downgrades from Moody's, which is not a joke. It is something very serious that, the paper has been downgraded. So stay away from debt-laden companies. We have seen a lot of accidents in the past.
Right. Thank you, Vijay. Thank you, Jay. Great having both of you midweek to help us close out today's trade. What a day it's been. We started a week. We walked into a closing, the last 1 hour of trade with cuts on the street, pretty much at the day's low point. But in the next couple of minutes after 2:30, there was a very smart recovery that played out on the markets, taking the markets to pretty much at the day's high point on the Nifty and Sensex. The Nifty conquered 21,600 pretty comfortably in the last 20-30 odd minutes of trade, going home with gains of 85 points, 0.4% higher on the Nifty. This, of course, doing a pretty sharp U-turn after struggling around levels of 21,500 over the last few days. The Sensex performed in line, 0.4% 3% higher. Bank Nifty was in line with the benchmark. A couple of banking names also helped the market in the last hour of trade. Bank Nifty going home at 47,375. Well, that is what the Bank Nifty literally looked like, the breakdown of Bank Nifty. ICICI Bank, IndusInd, HDFC, which was trading lower. Bank of Baroda and Fed Bank go home with marginal gains. ICICI Bank being the top gainer from the banking pack. Across the other stocks, you had Bandhan, which continues to be under pressure. PNB, Axis, SBI, IDFC and Kotak go home with small cuts. But the day honestly belonged to Reliance Industries after trading muted for most part of the day. It was in the last 30 minutes actually that saw Reliance make a push to close the day at the day's high point, 2,655. We saw aggressive amount of longs as well being built up in the options market, nearly 3% higher on Reliance Industries, and it was this stock that helped the Nifty close above levels of 21,600. Well, let's take a look at the other sort of stocks on the Nifty 50. Adani looked good. Adani Ports, Adani Enterprise, all closed go home with sharp gains. Adani Enterprise going up 3%. Cipla, RIL, HCL Tech were amongst the other gainers. On the sell side, you had the likes of DVs, ONGC, BPCL, HPCL that were turning out to be top losers. But Hersh, very unexpected. I don't think we were planning for a smart recovery. 21,500 was the support, but we've clearly gone up to 21,600.
Well, yes, absolutely, Samina. And smart recovery, unexpected, but it's been a secular recovery. Let's look at the advanced decline for more. And we'll clearly understand that the advanced decline has switched in the favor of the advances in that last 20 odd minutes of trade, and that just shows how interesting it got. Also, with regard to where the broader markets were, we saw both the small cap as well as the mid cap indices close in the green, which is definitely a positive as we go into trade on Thursday. And we close trade for today, right? Let's also look at some of the sectoral indices. Pretty much all sectors were in the red for most part of the day, all of which were under pressure. But now, look at the picture. It's totally different. Outside of the PSU, Realty and FMCG basket, you're seeing pretty much all sectors in the green, from Nifty Bank all the way to Nifty Media, which has been in the green through the day. So it's been a great day of trade, especially the last half an hour. It's been an interesting day of trade, but for now, we're completely out of time. Again, wish to thank both Jay and Vijay for all of their views on behalf of us and all the viewers. But for now, from Samina, myself, everyone who puts the show together, thanks so much for watching. We'll see you tomorrow.